Hi, I'm Victor. I'm an active value investor. I like to record videos showing companies that I've invested in and showing the analysis that I made in those companies. And today's video is going to cover a small company by the name of Pangaea, symbol PANL. This is a really small company, but they're very profitable and they have been a great investment for me. Let me tell you more about Pangaea. I like to scorecard all my investments and I like to ask 4 questions and then make a decision whether I should buy, hold, or sell my shares. The first question is this an industry I want to be in? Second, is the company operating and performing well? Is debt less than 3 times EBITDA? And I want a discount on the stock. That way I can see my investment go up in value. Based on that information, I make a decision to whether I buy more shares, I just hold my shares, or I should sell my shares. How did I find Pangaea? I was looking for a good logistics investment. I had been invested years ago in UPS, and that really worked out well. I think I got a good return, but the price for UPS just got really high, way above the intrinsic value that I calculated for that company. So I looked at, about 10 different logistics company and stumbled upon this company, and their financials were just excellent. It seemed like this company is at that time wasn't covered by any analysts. Now there's a couple of analysts that cover it, but it felt like a really small investment that would really pay off, and it certainly has. One of the things that I like about Peter Lynch, the great investor that ran the Magellan Fund, is he liked finding companies that were flying under the radar that few analysts knew about. Because once a lot of analysts cover it, it seems to be probably bought up to its fair value. If not, you'd have to buy at a premium. And this company kind of fit that mold of a really small company that few people had heard of. Let me take a look at their financials for the latest quarter that was closed, which was September 30th, 2022. Here's the balance sheet, and they have a really big cash position. So they've been making so much profit that they're carrying a lot of cash, and their debt has been staying steady and going down. So really strong balance sheet. Their income statement looks great as well. Their revenue has been increasing. Their income from operations almost doubled, and overall their profitability went up from an already very profitable 2021. Their statement of cash flow really shows that this company is just generating great cash. Their cash from operations increased really well, and their capex is really under control. They bought vessels a year prior, so they have more ships to work with and provide services. But this year, 2022, they haven't made a lot of capex. Looking at the 1-year return for Pangaea, it's been a really nice stock, up 36%, and they pay a 6% dividend. So a real winner in 2 ways. Over the past 5 years, it's gone up 114%. So a really good long-term hold that pays a great dividend. I value companies based on the free cash flows that I expect the company will produce and discount those cash flows to today's dollars. And I'm taking the 12-month, trailing 12 months for Pangaea, and that number is $64 million. I don't expect they're going to grow it. This industry is cyclical, so they may have some down years, some up years, but overall, that's what they're generating this year, and I expect that to be generated in 2023. Based on that cash flow and no growth, I'm not growing both the short-term and the perpetual growth. I'm going to discount those cash flows by a nice high 10% since it is a small company. They have a great balance sheet, but it's a small company. Based on that discount rate, the company is worth $600 million, but their current market cap is $241 million. And it provides a nice 114% discount on this stock. So it's still has a lot of upside left in the stock. Their balance sheet is in great shape. Their debt is $96 million, but their EBITDA produced is $109 million. And that's just for 9 months. So just on that ratio, They're less than 1. So that's an exceptional score and a very good balance sheet. A recap of PANL. Their performance has been excellent. They've grown their company year over year, this most current 9 months, by 27% year over year. They're very profitable. They generate great free cash flow at 64 million and pay a dividend at 6.5%. Their cash balance 118 million. So that's 41% of their market cap, and they have that's more than the long-term debt. It's actually 123% of long-term debt. So their balance sheet's really healthy, really profitable company. For 2023, the demand for what Pangaea provides is still there. So 2023 should be a very good year. I expect, or there's a high likelihood they'll probably have a special dividend to give back some of that cash to the owners of the company, which is the stockholders. I expect them to continue to be very profitable. Long-term, logistics companies continue to be in high demand. The global supply chain just continues to be more dependent between continents, and Pangaea is going to be a key supplier, service provider to many industries. They're going to continue to be profitable and pay that really high dividend. And I think it has great upside left. So the other thing is few analysts cover this company. So it is flying under the radar. As they get more attention, I think the stock price is going to go up because more investors will like what they see. So taking a look at the scorecard for Pangaea, it's a great industry. You got to buy in, right? You make your money on your entry point. This company is exceptionally run, and their balance sheet is in exceptional condition. There's a discount available on the stock, so I continue to buy shares in PANL. Thank you for watching the video. I really appreciate it. Do me a favor and like the video and leave some comments. Give me some feedback on what you like of videos and what you don't like. I'd love to hear from you. Good luck investing in 2023.